All right, we are caught up on chat. That's it. So let's dig into the meat of today's stream then. We're going to go over in-depth SPACs. The first thing I want to do is I'm going to look at the SPAC unit and warrant information. I want to make sure that it's clear because we don't want to just go buy shares of an SPAC, assume that it's a warrant, which would mean we get a 1-for-1, and then end up actually purchasing units that then get adjusted down by a fifth of the value. So I do want to check that, make sure that that's not going to have any implications, because I talk about this a lot. There's adjusted, well, I don't talk about it currently, but I used to talk about it a lot when I worked with corporate actions. They put out warrants, they put out when issued, they put out adjusted shares because of splits and other things. You get fractional shares and buy rights and a lot of different adjustments to a common share. Okay, the common share, easy to follow. You don't have to make any adjustments. All of the numbers are reported accordingly, and it makes sense. The warrants, when they're 1-to-1, should follow suit as well. However, if we're investing in units and we have to adjust and say a unit, as the first example here listed says, is 1/5 of a warrant, that means that we should only assign 1/5 of the price as actual. So if you take 10, multiply it by 5, that's 50. That's way too much for a SPAC. Our target is to be within 10 to 20%, hopefully parity, as often as possible when we're dealing with SPACs. So I'm going to look that up. We're going to learn that together. SPAC units versus warrants versus shares. Oh, hey, look at that. Somebody on Reddit is being helpful. If you are actually helpful, then you'll get an upvote. Very interested in SPACs, various SPAC mergers start ramping up. I'm going to read this out loud because, well, I don't know if it's helpful or not, so we'll find out together. We're getting a lot of new investors interested in SPACs and various SPAC mergers as they start ramping up. One of the most common questions are, what are warrants? And you're going to hear a lot of talk about warrants here because a lot of us purely SPAC warrant investors do not really touch the common stock. So what a warrant is: a warrant gives you the right to purchase an amount of common stock by exercising your warrant at a certain strike price after a merger happens. A SPAC unit used at IPO by the SPAC usually contains a share and full or partial warrants, and sometimes rights. Partial warrants are combined to make full warrants. There are various warrant conversion formulas depending on how the SPAC has structured them in their S1 form. I guess that is one point that an S1 would be helpful. What is a merger? So a merger is when, and this is going to be used a lot in SPACs, so it's a very good question. It's when, in this case, from a SPAC, the special acquisition company has chosen the target company that they want to invest in, and they purchase or merge with the company. Okay. In so doing, it allows them to insert their own leadership team, as well as guide investment and financial decisions for the company. Okay. In the case of SPACs, it's almost always going to be that the acquisition company is has the agenda of or attempts to take full control of the purchased company. And the reason for that is because they are hunting for unicorns. They are claiming a higher level of knowledge and sophistication when it comes to the guidance of a public company. And really, they just want the idea of the small company or the IP that they own. In very rare cases, they may actually be interested in the founders and their ability to create and or lead. But most of the time, the merger is just simply two companies coming together by definition. In SPACs, it's going to be that the acquisition company feels they are bigger and smarter than the company they're trying to buy, and they want to take this smaller company and buy it because they see some sort of exponential opportunity. Does that help? I think it does. So before buying, it's important to research the warrant conversion rate because this greatly affects the value of the warrant relative to the common price. Why would you buy warrants instead of common stocks? What are the downsides? Higher return possibilities, which also come with higher risks, and the ability to purchase potentially more shares later for less money. The risk is that you can lose every penny if the merger fails and the SPAC is liquidated. Warrants are far more volatile than the shares, but they are also more likely to double or triple in value over the commons. Let's use a theoretical example. I love examples. Option A, all warrants. You buy $2,000 worth of a 1-to-1 conversion ratio warrant at $2. 1,000 warrants would be awarded to you with the strike price of $11.50. The merger takes off, and by redemption date after the merger, the common stock has risen to $20. At $20 common minus the $11 strike, your warrant is intrinsically worth $8.50 each. That is a 325% return on your initial investment because, again, you invested it at $2 each. Okay. You can sell at the market rate, or you can exercise the shares if you are interested in holding the commons. Your $2,000 investment became worth $8,500. Option B, all commons. You buy $2,000 worth of common shares, let's say at $11, and that would be 182 shares given to you. The stock rises to 20. That means you get an 82% return. Your $2,000 became $3,640, which is fantastic, but it is not as high as the opportunity or potential return from option A. The downside is that if the merger fails or falls through, the SPAC is then liquidated. Warrant investors lose everything, zero. But if you bought the commons at 11, you get most of your money back because liquidation is $10 plus interest that was earned from the trust fund. So maybe you would get about $10.30 as an example. Well, that answers it for me. I personally am going to focus on the commons, so I will be doing that. And you guys know I'm super into options. Warrant would be akin to an option play, and because of the fact that it has the potential to go to zero from expiration, either they took too long to merge, or a merger fails, I'm not interested in playing warrants. Although it kind of fits a little bit with my concept on what SPACs would be. So I'm ruling it out softly right now, just in my own approach. But that's the main difference that you're going to have. I do want to dig into units, though. I don't think we're going to trade units, actually. But we'll check. All right. Here's the risk-reward matrix of the above. I'm going to gloss over that. Let me give you guys the link in case you do want a deeper dive, just in case. There you go. Important notes for the above scenario. It's an example to highlight the risk taking. Do not expect these types of returns for most SPACs, as SPACs making up to $20 are rare. Warrant prices do not usually perfectly track the stock prices, as is common with options. There are other calculations that go into it, as well as the fact that they have their own market liquidity issues. Okay, so if warrants are trading fewer and farther between, even though they have a higher perceived value, a trader may be forced to sell or liquidate a full position in not as equitable circumstances, meaning they might find themselves in a position to take a loss just because they need to transact now versus waiting for the market to reach up to a more fair price. Also, warrant redemptions dilute the common shares, leading to a drop in price for most cases. That makes sense. Why are warrant prices lagging? I think I just answered that. How likely is it the merger fails and you lose all your money? Historically, according to this reviewer, he's read that 20% of SPACs have failed to find a target and are liquidated. Not sure if that's going to continue going forward, assuming SPACs to continue becoming more serious and legitimate avenues for private companies to go public. One thing that warrant holders can take heart about is the downside risk, and that's again because the amount you invest is the amount you've got potential to lose, but you technically have that in buying the commons as well. Technically. Warrants 1-to-1. That's on my sheet right now, at least for most of them. I like that, but there are also situations where it's 4 warrant, 3 stock, or 2 warrants and 1 stock. Those are different ones. Let's see. Pershing has a strike of 23 because of the 2x scaling of the SPAC. Is Pershing valued at 23? They're doing a 2x. Let's go. This might actually help 1, 2, 3. Issue at 20. Okay. I don't want to pull the S1. I hate S1s. I'm probably going to have to pull the S1. Maybe the 10Q will help. No, I need the S1. Aha. All right. So, no, that's the current price. 1, 2, 3 is 27. So here is something that will help, and it's also, I guess, something we're going to have to watch out for as we're looking at SPACs. But Pershing Square, and this is what triggered for me to look at it, is they said it's a 2x scaling. Okay, that means that if they are doing a 2 times the standard issue, that instead of 10, which is the standard issue for most SPACs, they're issuing at $20. Okay, so when I say that the base value of a SPAC should be at a specific number, most were issued at $10 and have historically been. However, some of them, Pershing Square is an example, choose different dollar strikes. Well, I guess target prices would be more accurate. Different dollar target prices for their issuance or their common shares. Okay, so Pershing Square is $20 base value, not 10, which means it's not inflated 3x. It's just inflated by about 35%. So it is a little overpriced, but it is not as overpriced as I may have led viewers to view or see before. Does that make sense? What's an S1? So S1 is the investment objectives. It is meant to give investors an idea of what the plans are for a company. I'll go ahead and give you this since you are actively trading Pershing Square right now. But this is an in-depth deep dive to the company structure, objectives, and whatnot. I personally have read many S1s, as well as written one, and it's a little kind of it's showboaty. Okay, a lot of people like to use forecasting and other stuff, and basically it's to show that the people running the company understand how to do due diligence, but that is not an indication as to whether or not they will be successful in executing their plans. That's why I hate them, because it's just a lot of reading and it's boring to me. There you have it. Anti-Sejuani, hello, welcome, good to see you. All right, so there we have it. If we pull up Pershing, let's go see if they're on my list. STH. Pershing is here. They are way down on the list though because of, there you go, common price. Unit 1 to 9, 1 to 1, $23. Okay, so that will help me. Searching. What column is this? That's the percent change. Don't care. Intrinsic value. All right, so there's not going to be just a blanket way for me to do that, which means I'm going to add a column here. And as we figure it out, insert one to the left, common, base value. I'm going to say issuance, issue value. And because we looked it up for Pershing, stupid, I don't know where it was. $20. There you go. I also want that bold so it's easy to find. All right, so there we have it for Pershing. I've added one cell of data worth so far in this stream. That's fantastic. Anyways, we'll be working through some more. I do want to open up, though, at this point, as we've read through. Do we have any more questions? Hey, Further, thank you so much for the resub. 4 months. That's totally awesome. I appreciate it. Welcome, and thank you for your contributions to the community, my friend. All right, guys, so I do want to open it up for questions real quick before I start digging into the next set of data. I'm pretty comfortable myself in understanding the warrants. I am going to provide guidance to everybody who's going to follow this process along the way, and you may or may not decide to take action for your own portfolios. Steer clear of units. Okay, focus on the common stocks or the warrants. Again, I gave the definition here of the warrants. We've got that link. I'm actually going to go ahead and post this, as I think it's valuable information in the Discord resources. So I think you'll find that helpful with that, so you guys can revisit it. But as it stands, my guidance is to avoid a unit. A unit is going to be once removed from a warrant. A warrant is once removed from the common stock. So basically, units and warrants in this case are kind of playing the same aspect as call options. A warrant is going to be a call option on the underlying stock. A unit is going to be a call option on the warrants, which further complicates. I don't know why you would dilute through derivatives that far. It's not worth the headache and the extra math unless you want to do it, because again, in using derivatives, you're giving yourself leverage in order to purchase more with less. And so it comes with additional risk and expiration dates. I'm not super interested in that. I will probably revisit at some point warrants, but as it stands right now, not really interested in taking action on warrants. NVA Hitch, how do I feel about the valuation of these SPACs, since most, if not all, were rejected in the PE space? So almost all of them are going to have actually no earnings for quite some time, as well as the majority that do actually make purchases. Great question, by the way, NVA Hitch. Welcome also. Anyways, so most of them are speculative plays. Okay, so PE is not the only valuation to use. Oh, private equity. That makes sense as well. That's also a very valid question. Let me finish the earnings side of it. Because these are speculative investments, okay, it's assumed that earnings aren't expected right out of the gate. Okay, so that's still a valid question, but private equity is makes a lot more sense and is more on topic. So from private equity space as a whole, think of it this way. Not everybody is, and especially not everybody who participates in the market is affluent who qualifies as affluent. Okay. And what I'm saying by that is they might qualify as an affluent investor based on the amount of money that they have, as well as how much income they make. But that doesn't mean that they are industry experts or more savvy than other investors. And that's the reason why SPACs are going to continue to invest. Because basically what the SPAC is saying is, okay, so this company, ABC, we'll go with a solid state battery company as an example, is not attractive enough to get the attention of an angel investor. Okay. Nobody wants to take this on as a passion project. So a SPAC gets together and says, okay, can't raise money for you from a single or a small group of private equity investors. Let's go ahead and try to take it out to the broader market. That's me, you, and everybody else. For years, for a great many years, even myself as an investor wanted to participate in seed round funding. Okay, so there's a very real demand there. Now, unfortunately, because of the last couple of years and the sharp increase in interest in the markets, there's also a lot of gamblers who want to participate in seed round funding. And I've been saying it all year, last year, 2020. I guess I could say I've said it all year this year too. Anyways, I've been saying it for some time that retail investors as a whole have a very high appetite for risk right now, and investment decisions aren't totally logical. It's going to be seed and or early venture capital. Okay. I look at seed round funding just because of how long I've been in the industry, and I understand there are different levels of seed funding, but I look at the entirety of funding up until you move to public, or you take on a 50% plus partner as seed round. Okay. And the 50% plus partner would have to be high level financing. Okay, they're taking you're partnering with a multi-million or billionaire who is agreeing to continue to fund the needs of your company going forward. Once you hit those levels, you're beyond seed rounds in my mind. But the strictest definition of seed round funding is going to be less than 50 investors, and it's also going to be less than, I believe, the dollar threshold for it is 50 million in total financing. And that could be equity and or debt. Seems kind of sketch, the amount of risk of going public versus private. It is, but there's a very romantic notion, especially among entrepreneurs, of taking a company public. Sure, there's a lot less risk staying private. But the argument of the people who have big amounts of money, if you watched Shark Tank for any period of time, then you heard Cubans say stuff like this all of the time. Do you want 100% of your grape, or do you want 10% of my watermelon? Tip. All right, I'm gonna let you guys in on that joke. Anyways, basically, Mark Cuban saying my balls are bigger than yours because I have more money. That's why I laughed. It just made me laugh. You never move beyond junior high comedy. It's always funny. But yes, thank you, NVA. Fantastic contribution to the conversation here. Those are very valid points. And it actually brings up, again, my guidance is SPACs are going to be considered an advanced investment vehicle. I do not, and I will never say that participation in SPACs is for all investors. As a matter of fact, I think the majority of my community should avoid that, as well as just investors in general. It is only on my radar based on the level of popularity and notoriety it's gotten over the last year and a half. And I personally have an investment theory I want to test out. So I decided to go ahead and share my musings and working through of it online. Miratori, but a grape is more nutritious than a bit of watermelon. That is true. You'll find more fulfillment, right? You'll have more control of that little company. It'll be your baby. There's a satisfaction that comes with owning a whole of something. So that's a very valid contradiction to the analogy, Miratori. NVA, you are 100% correct to be skeptical of SPACs, honestly. And I also am skeptical of SPACs. But I have a hypothetical portfolio that I want to test out a theory on. And so here we are. 1, 2, 3. Don't SPAC. So usually SPACs don't get above 20-ish. Correct. And anything over, I cannot stress this enough. I feel like I've answered this 100 times. But I'm going to answer it again as often as it comes up for today and tomorrow. And then I'm going to make a bot for it so that I can just push a button. But SPACs should not be valued over their issuance price. Okay? They are taking $10 from you. That is all they have. Once that $10 hits the market, people are going to trade it up and down and sideways, and it's going crazy this year. Okay? If a SPAC moves above that $10 initial equity, they are overvalued 100%. End of discussion. I don't care what announcement they've made. They haven't actually made any money yet. All right? At the point of acquiring an investment company and then helping it grow, they are going to have to assess and spend money to make a workable or viable concept into a workable and viable company. Okay? And some SPACs are purely speculating on the purchases that they're making with other people's money. Okay, the high-end institutional investors, and I think this is going to clarify for you, NVA, on why you're so sketch. But the higher, more fluent investors are okay taking losses. That is a very common and important part of their wealth management strategy. Okay, if they have, imagine this: if you have yourself $1 billion. That is $1,000 million. Okay? Let's say you live a lifestyle where you know that for the rest of your life, you're not going to need more than $100 million. That means that you have $900 million just sitting around in your life waiting for something to do. So they can make $1 million investment 1,000 times over. Well, 900 now. 900 times. And they only need one of those companies to go from that $1 million investment to $1 billion. Just one. So they get to take 900 shots on goal and attempt to possibly make money. If that one investment goes up from $1 million to $1 billion, then they've made back all of their capital plus 10%. They are now worth $1.1 billion. They don't care that all other 890 investment bets went under. They will write that off so they can keep more of that $1 billion in their pocket for tax purposes. That's the best way I can come up with that analogy to help you guys understand that rich people don't care about losing money. Obviously, everybody's pride wants them to succeed, but they understand that the name of the game for growing from 1 billion to 2 billion is to take risks. And they have a much, much bigger bankroll to take said risks than you and I do. Thaddy can't imagine having that kind of freedom. It is a very clear way of understanding. You are welcome. Musk surpassing Bezos. That is very meme, but that's the world we live in right now. The masses are supporting the memes. We're not happy with the establishment anymore. That's basically what it says, Lord Mark. Dried raisins are useful too. That they are, Frackspace. That they are. All right, I think we've hashed that out too pretty good. What? So 1, 2, 3. You have a lose-lose situation investing in PSTH. So again, you bought at a higher valuation. You paid $27 for something that is essentially worth $20. Okay, it's not necessarily a loss. Okay, you can either close out at break even. Okay, I don't know what your exact dollar amount was getting out, but you can sell it and just say, you know what, I'm going to be more careful next time getting in. Or you can continue to hold your shares and wait for the hype. Okay, hype's not guaranteed. All right, but what you can rest easy is at the end of the day, if Pershing Square is unsuccessful in their endeavor and they close their doors, you're going to get back $20 plus a little bit of interest. Or maybe minus fees, because if they have to pay out fees, then maybe you get like $19.40 or something back. Okay, but that is your floor of risk on the SPAC right now. Okay, but if they make an announcement and people get overly excited and hyped like they have been for SPACs over the last year, maybe that $27 balloons up and it's $37 or $47. Okay, that is still a very real possibility. Okay, you did not understand the risks going into the trade 1, 2, 3, but that does not mean that you still don't have some opportunity. So you have to decide, are you done with the roller coaster? Do I want to take this off and just take my lumps and learn and invest in something I have more confidence in going forward? Or do I want to ride this out and see if it does end up working in my favor? NVA, that is the best answer there. Like that deserves some sort of long ass Reddit rant all on its own. I want to see somebody write that up against or opposing SPACs. Well, excuse me for not wanting to invest in a billionaire's YOLO. That's perfect. But honestly, everybody investing in Tesla right now or trading Tesla, I don't think there are many actual investors left in the world for that. Everybody trading Tesla is following a billionaire's YOLO. Further, they are fun to short though. Yes. It is fun to short billionaire YOLOs, especially when you see the folly ahead of the rest of the market. Shorting thin markets. Yeah, you would be shorting if you're shorting SPACs thin markets. All right. I think that is very sufficient. Please don't hesitate to throw in more comments or questions along the way. But I, for one, am going to move on to the next step. So I am comfortable. I understand the warrant situation. I'm going to double check real quick. But again, my personal focus for this hypothetical exercise is going to be on the underlying common. So I don't think I need a lot of warrant details. 2-1, I do want to highlight that. Oops, not that one. That one. There we go. No warrants. Basically anything that's not a 1-1 warrant, that's not a 1-1. Do. 1-1-1-1-1-1-1. Nothing. NA. By the way, for everybody participating, I did put together, or not put together, I bought this actually. I purchased this spreadsheet and its data. There is a version of it available in the Discord. My only request is that if you do actually use this for an investment decision, that you go to the site, which is linked, and make the purchase of the sheet yourself. I am in no way affiliated with the research firm that put this together. However, I'm finding it to be useful information and data. And whenever you get something like that from someone who is charging for it, then you should be willing to pay for it. However, it's shared with my group because I understand most of you are not actually going to take any action. And the only reason I paid for it, because I'm not taking real action, is because it's giving me actual content to talk about online. So they deserve my purchase. So hopefully that helps. All right. So all I did was I went through and highlighted the ones that are not warrants going 1-to-1. So anything that was 2-to-1, because that's the only other adjustment I saw on the warrants. And I am moving warrants out of important data because I'm not going to be trading the warrants personally. So I don't find that important information. All right, so I'm going to fill in over time the common share issue value, but my assumption is going to be that everything until I get to this $20 mark ish is going to or should be a $10 value. So I'm going to be fine leaving this as an assumed sell until I dig into a deeper layer and find people I'm actually interested in. Now, for the important part of this stream, and I think this is foundational. Oh, Miratori, you did a stream raid. You know what? I'm going to take advantage of the stream raid before transitioning because this next topic is going to take a few minutes. We're going to start a stream raid as requested. Raid. Boop. There we go. And while we're queuing it up, I'm going to go to the bathroom. All right. Don't see anything special there. Let's go to the store. I want scrolls. Flag bearer, I'm buying now. Healer, as always. Don't care about barbarian. All right. No upgrades available. Rogue, but I don't care about the rogue. All right, let's go for the stream raid transition, guys. Let you open it up. No problem. What I'm going to do is I'm going to go ahead and start the battle. And now you guys have the link. So for anybody who's not participated in Stream Raiders before, it's just a fun game. Nice little intermission. It helps to pass the time because, you know, this is not all about me just rambling. It's also about entertainment and enjoying your time here in the community. So I place a unit on the field. I'm going to go ahead and go with the tank first. I usually go healer first. And I'm going to put him over by whatever this house is. Then you guys also click the link and you can place your units around. And then we get awarded prizes and level up together. So welcome to the Stream Raider, guys. Go ahead and place your units. I am back to the stream. Ta-da! All right. Welcome back, everybody. Thank you for your patience. Okay, so SPAC rules and guidelines. This is pretty important. I'm going to make that bigger so it's more visible. There we go. All right. In a big part of my ethos and training when it comes to talking about stocks and investing and the disciplines therein for financial management is to understand that if you do not have a set of rules when you're going into an investment idea strategy, whatever, you're setting yourself up for failure. Okay, the more room you allow yourself to, I'm going to base it off of gut instinct, I'm going to go with the flow kind of situation, the higher likelihood you're setting yourself up for failure. The reality is, studies have been done time and again that if you go into an investment strategy, regardless of the type, okay, this applies to day traders, this applies to portfolio management, long-term investors, speculators, etc. If you do not have a plan, you are 80% more likely to fail versus someone who does have a plan. So to help increase your chances and your odds, it's really important that you take time to set up a clear concept of what it is you're trying to accomplish and how you expect that to go, because it's going to better guide your decisions. Okay, it's going to be less on a whim. You're going to follow the news, okay, but you're less likely to be manipulated by false news or inaccurate or incomplete news or speculation, because you've got some sort of a guide to get you through or help you navigate better. For myself, based on my own experience, I am targeting that we buy, within 10 to 20% of the trust value on the SPAC. And that is the value from the filing, okay? And that, again, is going to be relatively close as expected, or should be expected to, most likely $10 per share, okay? So that's what I'm going to do. I am going to put that in parentheses as well. Likely 10 per common share. For now, based on the early research that we've done, I also want to add here that I will focus on purchasing of common shares. Not interested in warrants right now. If I do decide to go the route of warrants, then I will add rules specifically guiding what my expectations are for warrants. 1, 2, 3. Are there any investing traps to know other than SPAC companies? Yes, 1, 2, 3. There's a plethora of pitfalls out there. Okay, the best guide that you're gonna find yourself is to not invest in anything that you don't understand. Start there. Okay, invest in what you know. That's really, really important. My guide is to, if it looks too good to be true, it's a trap. That's perfect, Merc. Okay, but anyways, if you invest in what you know, then it's not chasing someone else's hype. Okay, you're following your own guide and your own knowledge, and you're less likely to make mistakes, because the reality is that as a discipline, much like golf, okay, you are competing against yourself as an investor. You need to manage your psychology, you need to manage your reactions, you need to manage your money, because I don't care how much you've got to invest. Unless you are buying more than 5% of a company, you have no say in their success or failure. You don't know if the company is going to be able to handle successfully their user base or their client base or their fan base turning against them. You don't have any control over investors deciding that Elon Musk is going to the Mars, and so therefore he should be the president of Mars, and therefore his company should be valued more than every other car company currently on the planet, because his cars are in space. Makes no sense whatsoever, but that's what's going on. So that's really the primary guidance for avoiding traps, is just focus on what it is you know, the technology, the industry, the company, the way that they do business, that kind of stuff. Okay, it is boring, and I hope to kind of bring a little bit of levity to that and make it less boring of a journey through investing, but you will find more consistent success sticking to that. Thaddy says, or for the Twitch crowd, it's like a speedrunner competing mostly against yourself and using others as a weather vane. Or is that a bad idea? No, that's fine. Right? So anybody who's attempting to emulate success needs to start somewhere foundationally. Okay? We'll use golf as an example because I've known a few golf coaches. Basically, they teach you the mechanics and the form of the perfect golf swing. But the reality is, if you look at elite athletes, okay, and you compare them against each other, then you're going to see that Tiger Woods is going to have a completely different swing than the next guy on the bracket. Okay, but they foundationally all start at the same place, and you, as an amateur or a rookie looking to participate, are going to attempt to emulate the foundation of where they start, and that's going to get you in the habit of practice and trying out and improving. And eventually you're going to notice that over time, to move from I can do this to I am successful at this, you have to make modifications or adjustments so that that swing is now your own personal swing. And you're comfortable with it. You can repeat it successfully time and time again. And so it doesn't matter what endeavor you're chasing in life. That's a foundational principle to learning and eventually becoming good at something. You got to put the time in. Pure and simple. And it's not really like comparing yourself to others. It's more emulating what you see as a successful practice to help yourself build the disciplines or even the skills to improve. Welcome, bro. And why isn't it working? Oh, I got a regular click. Thank you. Appreciate it, Meritori. You beat me to it by a second. Excuse me. All right. That was... I'm choking. Excuse me. All right. So rule number one for me is to buy within 10 to 20% of the trust value. Most likely that should equate to about $10 per common share. Rule number two is to invest in what I know. Okay. So that's going to rule out any biotech SPACs for me. I'm not going to try anything in advanced medicine. I will be cautious on the... For myself, I'll be cautious on the bleeding edge or cutting edge technology plays, which are going to be rampant in this type of investment. So it is going to rule out a lot of opportunities, and I fully understand that. I accept it, and I'm willing to move forward with that rule. The next thing is the managers must have experience in the sector. Okay, so when I look at the people leading the SPAC, which this Excel sheet very nicely gave to me. Who are the leaders, directors, advisors? Okay. If I look at this list and they don't have any experience, like they're just a group of financiers who have not successfully participated in, let's say, the startup of Twitter for tech plays, or some sort of exposure to robotics or manufacturing as applicable. If their management group does not align with the objective, which is the target focus, then I'm ruling them out. Done. Moving on. Don't care. Okay. So that's an instant blackball for me. Next, I will focus on the purchase of common shares as opposed to warrants. Exit criteria. Okay. I will take profits and carry forward with house money as soon as available. Okay, I understand that rule, but basically what I'm saying here is if I buy, okay, as an example, any SPAC at $10 per share, okay, and it increases to $20 per share, I will take half off of the table and carry forward house money. Okay, that means that my initial, as an example, $1,000 investment for 100 shares at $10 is going to be recouped by selling 500 shares at $20 as soon as it is available. Okay. I could also achieve this by selling 75% of shares if it were to increase to $15. That's another way to play with house money. But I think I'm going to focus primarily on the 100% return and carrying forward 50% of the position. So I should make that a caveat. Turn, carry 50%. Okay. And this is my removing of risk on this strategy. And this is the main reason why I wanted to try it, because of how crazy the SPAC market has been. And I expect that there should still be room or an appetite for the risk of SPACs for the next year. So we'll see. This could very quickly turn against me, but that's my primary focus or idea here. I feel like I need another rule. Let's think. I mean, I'm not putting bankroll management rules here because that's just kind of a default of my primary ethos, and I apply those regardless of the investment strategy or vehicle. Let's go back to the spreadsheet. There's something about time frames here that I saw that they tried to categorize. IPO date, percent of progress to deadline, estimated completion deadline date. (2022) I mean, honestly, a SPAC could essentially issue with already having an investment concept in mind. Like this one, I think. Oh, wait, no. That's just who's leading. Never mind. But they could issue themselves as a SPAC and say, oh, we want to buy, I don't know, L Brands as an example, right? And you would expect that they might make that merger acquisition basically as soon as funding's done. But maybe they want to watch or do additional due diligence, and the SPAC was a means of giving them access to more information on the company, the prospective company. And somewhere along the lines, the due diligence fails. But if they left an open S1 and did not specifically state, we are going to buy L Brands, then they're not under no obligation to complete or follow through with that transaction. Also, the completion date on a SPAC, another scenario could be, yeah, they're going to buy L Brands, but they're not going to actually pull the trigger for 9 months or a year and a half in hopes of finding a better pricing situation. Basically, we want to watch L Brands kind of burn through their capital so that it's not as expensive for us to go in and buy up the remaining assets and move forward from there. It's cutthroat, but that's kind of the way that the M&A world works, so that's fine. But that's what the completion deadline thought process is a little bit. I think I think it would be fair to say no SPACs with a deadline in 2021. So basically, I want to allow them the breathing room to transact as late as next year if necessary. But maybe I'm not willing to wait around so long. Like in this case, January of 2023, I don't think I want to wait 24 months for an acquisition to actually take place. And definitely don't want to wait around until 2025. Oh, wait, no, I'm sorry. That's 2021. I was looking at it. They're doing year, month, date. I was looking at it backwards. Hooray for dyslexia. All right, so let's see. Any 2023s here? No, I don't even need to make that a rule. They're all 2021, 2022. So let's target... let's see. What are the ones still near their value? So I sorted the list by common price. So it's going from common price down. Yeah. We're going to go ahead and go with that then. 2022. That one's November of 2021. I'm okay with that. I'm thinking October, so October of 2021. Anything later than that should be okay. That's October of 2022. That's a little bit long. So I'm thinking for myself, I'm comfortable with the range of investing anywhere between now. Well, I would say October. So October through, let's see. I think I'm giving it too much restriction. I might be overthinking this. Well, no, because I don't want them to be, regardless, even if they are still at parity, I don't want them to only have a deadline of like 3 months. So deadline needs to be greater than, I'm going to say, 9 months minimum, and before 18 months. So I think that if they've got a deadline that much further out, it could indicate that they're going to drag their feet a little bit longer. So 9 to 18 months is what I'm going to put as my range, and I'm comfortable with that. So what was that column called again? Come on. Completion deadline. Deadline 9 and 18 months. All right. Looks like there might be a few 2023s and not many. Yeah, I agree. In terms of long-term investing, does it mean yearly trade or monthly? What are you talking about? Because investment, like if you're talking about tax treatment, short term is anything under 12 months of ownership. And that's 12 calendar months. It doesn't matter what your tax year is or whatnot. It's still short term if you buy it in August and then sell it in May. Still short term. But if you buy it in August and then sell it a year later in October, then you're fine. That's long term. And that adjusts the amount of taxes you pay on the trade. Boredom is a killer of reason. Sometimes it is. Sometimes it is. All right. I'm happy with this list. I think that this is a good amount of rules. As I dig in a little bit more, I might add some. So now the real heavy lifting is going to kind of begin. I can definitely rule out a significant amount of stocks on this list. So 1, 2, 3. Think about it in terms of this. All right. If you're paying taxes because you bought and sold something, then that means that you made money that you didn't have to begin with. Okay. If you are holding a short-term position that yielded you a 20% return, okay, you're only paying taxes on the amount over what you initially invested. So if you put in $100 and you take out $120, you're paying taxes on that $20 increase over what you invested. Okay, you're not paying taxes on $120. You're paying taxes on $20. All right. If you're going to hold to try to save, I don't know, that'd be like $6 in taxes or something, depending on your tax bracket. If you're trying to hold an extra 9 months to save $6 in tax obligation, okay, then there's no guarantee that that $20 gain is still going to remain over that period of time. So it's really just kind of about understanding the math behind it. But realistically, it's not, if you're trading, okay, if you are trading actively, then it's not about the time frame. You just count that additional tax obligation as part of your overall investment cost. However, if you are long-term investing, that's the point at which it becomes a consideration. And most of the time it won't, because if you're long-term investing, your initial expectation when you bought it in the first place should have been to hold it for 5+ years, which automatically puts you in the long-term tax bracket. Partailing, you like it? Yeah, this is the cut all the junk and noise off the list part. I'm gonna do it easy first by what is within value range, and then also the deadline for dates. I'll do those two first. But there's going to be a lot of heavy lifting involved in checking what the company is. That should be relatively straightforward on the Excel sheet. I shouldn't have to leave to do that. And then the manager experience, I'm just looking for a match superficially. And then if I have a high interest in the fund, I will probably go and look at like LinkedIn profiles and stuff. No, it does not depend on the investment. It depends on you and your income situation. Long-term, short-term. It's time frame. Okay, again, 12 calendar months is qualified, or the qualification hurdle for long-term investment expense, and then or taxation rate versus short-term. And the rule of thumb for many years, I did not look at 2020's tax code changes, so there's a possibility some of this has changed. I won't do my taxes for another 2 months anyways. But anyway, prior to 2020, the guidance has been long-term capital gains are taxed at 15%, short-term capital gains are taxed at your income bracket. La Dune, you don't have to have 10K plus profit every year to be taxed, correct? No, La Dune, you are taxed even if, because interest expense as well. It is based on your income bracket, not your investment returns bracket. So if you made $12,000 at your job and you made $5,000 in investing, then you owe taxes on that $5,000 that you invested because you're over the minimum threshold for the tax brackets. All right. I think the timing on this couldn't have been more perfect, so we're going to switch to the stream rate. Boop. Oh my goodness. This is the most participation we have, and I think we're only destroying 2 buildings. They don't stand a chance. Yep, that's all we're fighting is 2 buildings. Oh no, the buildings are releasing or spawning monsters. Well, the left side died almost instantly. Right side spawned one and is now dead. Overkill. But I prefer overkill to getting killed, so there we go. Lord Mark Rune with 3 assists. Thaddy with 2 kills, 1 assist. Further with 1 and 1. Miratory, only 1. Even though it looked like you placed the most units. No, Thaddy placed the most units. Alright. But not bad, guys. Great job. I'm glad that we didn't lose our first match. Winner. All random. Because that's the way we do it. You guys, why can't I can choose to keep 25 for me, but I can't even keep up with my own spending. So 5 to each of you. I wish I could make that like a little bit more, but I can't. So 5 each. There you go. Congrats to Miratori, Tonberry. I love Tonberries. My favorite Final Fantasy monster. Filthy Cash. Congrats, guys. Payouts. Good job. Who's the Tonberry Lord? Like, I need to know who that is. Collect the gold. Collect the random scrolls. Flag bearer. Ooh, I think I can upgrade my flag bearer now. Maybe I'll use it. Yeah, I can. There we go. Alright, flag bearer upgraded. It is a support character, so I'm going to go ahead and use that today for the first time. It is a big fight, so I'm definitely going to need your guys' help. Here's the link. There you go. Alright. Stand mostly up front. That looks like a wall or a barrier, so I'm going to go ahead and come down here to the corner. Hopefully I don't die. Protect me, guys. Alright, there you go. Back to the stream. Oh, dear Lord. I said no politics on today's stream. My wife just said that statement was very Trumpish of you, and it upsets me to be compared to him, but I can't deny how funny that statement was. Anyways, you have a baby level 1. Oh, there you go. Tonberries. Yeah, no. Tonberries are the little green monk guys that come up and they hold the lantern and they stab you. I don't know why I like that monster so much in Final Fantasy, but I do. It's fantastic. Further, rule of thumb you follow is to stash away 30% of your gains for taxes, and that's for here in the U.S. Yes, and that makes sure that you're not overspending your obligations, because it sucks to come to the end of the year. I did that a first couple of years investing, and then you have to figure out how to pay the taxes that you didn't save your money for. Feels bad, man. Really does. All right, so we're back to the list. I'm sorry, we're done with the list. What I'm going to do is we're going to immediately copy this tab. What? Duplicate. There you go. Beep. And rename. And this is the auto pair list. That's the, yeah, that's how you spell that one, right? Bear down. Yep, that's the right spelling. I'm dyslexic, so synonyms drive me nuts all the time. Further, are you a secret Twitch billionaire? No, he's a vocal Twitch billionaire. All right. I am, even without going through it, immediately going to dismiss everything over $12 and below, because some of them might actually have a $20 strike below 17. So here we are. Here we have it. That is 173 to 207. And I have to remember that so I can drag down. 207. There we go. All right. Done. Oh, I should have right-clicked and removed. Delete. There you go. All right. Don't care about those. Not going to really worry about working through those. And here's the thing. I'm dealing with, it was like 300 and change, still 300 and change. how many is that? 379 different investments. I don't need to work through them one by one. And this is why I gave you guys the list before I started Frankensteining it. Because when you're looking for investment ideas and objectives, a lot of people who are micro focused have a compulsion to want to dig through all of the details just in case you're going to miss like that golden nugget. But setting up your rules and guidelines helps make that process easier. If they're not investable right now, don't waste your time trying to make a case for them. Just it's too much. All right, so next thing we have is our not IPO date. We want the estimated completion date. So we are going to sort this one. 2020. So you're out because you already expired. 2020. So I said anything between 9 and 18 months, which means September of 2021. This would be the first investable. So everything above line 20 is getting deleted. Goodbye. You are the weakest link. Goodbye. All right. I love that show, by the way. It's hilarious. And then outside of 18 months, that is, we'll say August of 2023 completion date. That's very generous. Wait, hold on. No, August of 2022. What am I doing? Holy cow, I'm going to be getting rid of a lot. Maybe I need to expand that a little. Let's go October. I'm going to give it just a little bit more because there seems to be a lot that are ending in October. So we're going to do anything beyond October of 2022. Wait. NBA. You know they had to drink celebrating that symbol, ticker symbol assignment. All right, here we go. DDR is the first one. 2023s. Wow, there's a lot of 2023s out there. All right, and none of you guys have dates. I don't care to figure out why. Doot. This is our biggest parse on this pair down here, so I'm hesitant, but I'm gonna pull the trigger. Gone. Dead. All right, there we are. Okay, so I've taken a list from 390 down to, what is that? 170. Cut it in half. And some very small fail swoops here. All right. Let's see. Let's sort by advisors. A to Z. And we're going to go ahead. Do I want to go through the work of finding all of the investment advisors if they're not on this list? How many am I getting rid of? About 70? Okay, so 62 to be exact. This is a thought exercise. This is just proof of concept. I'm not going to sweat it. We're going to delete those as well. Gone. Not even going to hide them. I thought, oh, maybe I should hide them. No, they're gone. Okay. So now I have a list of advisors, directors. I can go over here to this column and it gives me their target focus, which I actually want side by side. So definitive agreement. A part of my investment objective is actually to invest pre-agreement. So that is going to actually become Rule 7. Pre-agreement. So I am going to get rid of anything that has a definitive agreement as well. All right, so sort by this status. Don't care about completed at that point. Because like... nope, shift. Gosh darn it. There we go. I'm supposed to right click. I know that. There you go. Like it was said earlier in the chat, who was it? Specifically NVA. We're not really interested in playing or allowing billionaires to YOLO our own money. Okay. My investment objective, and I should have let you guys in on this secret earlier, for this is to take advantage of the market as it stands now and the overexcitement that people are hyping up these SPACs. I want to buy a SPAC at or near its issuance price or parity, and then sell off all of my market risk or exposure once they make an announcement and pop, and then hold the remaining shares of said SPAC to see how well the investment performs over time. So basically, get in, take my profit, get out, and let the investment do whatever the heck it's going to do going forward, and see if I will make more or less money over time from the initial investment. So I will get rid of all deals that are complete. Searching pre-unit split. Not dealing in units, so we're getting rid of the units. Delete. All right. I think that's not bad. Now let's drag the focus over. Oops, drag. Whoa, not that far. Target focus. Jeez Louise. I don't like how fast my mouse is sometimes. All right, let's do shrink it. There we go. Come on. Don't care about underwriters. There we go. I want the target focus and the directors to be close. All right, so at this point, what I'm going to do, and I don't feel compelled. I mean, unless you guys want to see me do it, but I don't see as much value. Why is that an image Pershing square? We'll delete that and have to fill it in myself. But I don't see necessarily a lot of value in matching the investors to the targets on stream. Basically, all you're doing at this point, all I will be doing, I should say, is I'm going to look at who the leaders are, okay, what their target focus is, and then I'm comparing it back to my rule list. Does the manager or management group have experience specifically in the sector? The next thing I'm looking at is invest in what I know. That's going to be a big part of this one as well. And like I said, I vocalized already, I will not be investing in healthcare. So this one gets out. I can just delete it. I won't be investing in healthcare because that's not my forte. It's not what I'm good at. I will also probably just arbitrarily delete anything that is looking to work in the sectors of oil or finance. I'm good with alt energy right now. I'd be okay speculating on a few of those. I am definitely into or excited about the possibilities behind different technology, media, cloud, that kind of stuff. But what do we got? We got fintech here. Yeah, not super excited about fintech. So those are the kind of deletions I'm going to continue to make on the list. And then once I get this list cleaned through that aspect, I will be going through and attempting purchases or limits as close to parity as I can get. And it looks like almost all of these are still really close to the $10 mark. This one's at 12, and then the Pershing fund is at 26, but its parity is 20, so that's not too bad. Thaddy says, you appreciate we're doing this today. You're learning about more specific means of research in DD. It helps make it more concrete in your head that research in DD isn't just analyzing graphs and reading news/financials. Yes, exactly, Thaddy. News and balance sheets. Well, news is like step one, right? That kind of gives you ideas on what's going on and where to find investment opportunity. But really digging into the balance sheets and the charts, that's only a step along the overall journey. If you've already got your list or your investment strategy in place, then usually it's enough to give you ideas of what to take action on. But this is a new investment concept for me in attempting to make decisions based off of it. So this is really the foundational due diligence level. Because this is going to build or be what I build out my trading strategy on for SPACs specifically going forward. And then any new symbols that come across my desk after I've done this legwork is going to be a pass-fail, and that should be relatively quick, right? So a new SPAC announces tomorrow, let's say. As long as, well, they're already going to meet my common price, so now I need to look at the person running it and say, do they meet my other criteria? Do they have experience in the sector they're targeting? And do I understand that specific sector? And that's a 2-minute review after I've gone through all of this foundational work already. Filthy Cash. Wait, do we want followers only chat on? You don't know why it's turned on. I had to take a call. Oh, yeah, somebody else possibly turned it on. You can put it back to everybody chat. My stream's not big enough to restrict. It helps. Like, it helps stop and prevent some spam. But we've got bots and stuff to block most of the spam that tries to come through. So yes, please go ahead and flip that switch for me. I would appreciate it. But yes, Thaddy, that is exactly what it was. All right, guys. Do you want me to continue with this due diligence, or do you want me to open it up back up to general conversation Q&A type stuff? Completely up to you all. My plan was to continue with the due diligence, but now that I'm at this part, I'm like, is that really going to be valuable to the community? Keep going. Open either way. Due diligence. All right. The ayes have it. We are going to continue on with due diligence at this point. All right. This one's pretty easy. It's just going to be comparing the list here. The fact that the organizers of this list were so kind as to put previous roles. Like, look, this is an executive partner, Acon Investments, former senior VP at McDonald's, and then this next person, former COO, Chief Operations Officer at Viacom. That saves me so much searching and research. It's not even fair. So anybody, again, I'm going to say this one more time. If y'all get value out of this list and take action, all right, if it's just for like your own educational stuff, do not feel obligated. But if you do take action and pull the trigger on some sort of an investment based off of this stream and the next one in particular, go to the Discord, go to the people's sheet, and pay for the damn download. It's $10. It is cheaper than commissions used to be. So do it. It's only fair. because I have to tell you, this is the kind of data provision that makes me happy. Holy moly, that gets huge. I don't want it to be that huge. And it's stuck on either or, so now I have to do this. There we go. I don't want it that big. Director of Logan Programs under President Obama. What does that even mean? What is Logan Programs? I'd have to go look that up. But it's there. Oh, I can read it at the top. Yeah, I can make this as small as I want it. All right. All right, so saying all right so a lot today. Gosh darn it. Don't really need tickers right now, so I'm just going to shrink that super small. Target focus and prominent leadership. Okay, so there I go again saying it. Adam Cringer, partner, Acon Investments, senior VP at McDonald's. I cannot say that they have a background in sustainability. But let's go look at Adam here, Adam Krieger. Krigler, that is the right person, right? Too many tabs. No, it's just Krieger, no L-E. Krieger. I need more data than that, obviously. We're going to go Acon S2. Acon S2. Guess I didn't spell his name right. All right. Here's his LinkedIn profile. Leisure, hospitality. He's just an M&A guy. Growth and strategy. Private equity. I'm not seeing sustainability. And so, just so you understand, like, when I'm looking at the target focus of sustainability, right? Something that pops into my head is, well, that's kind of like a catchy, like, passion project-y type thing. So he's already an old guy. He's looking to make an impact on his life, do something that he sees is going to make a difference, etc. Means he's going to be less likely to be focused on things like profitability. Sustainability is fine. Like, I'm a big fan of it, and I think that a lot of things that are being done in terms of growing and thinking about growth for the future requires the hat or the objective of making sure that sustainability is a piece of that, but it does not excite me as an investor. But again, that's not on my rules, so I'm not going to rule it out just because of where it's at. But what I do want is I want to see that somebody has sustainability in their background. So the next one is going to be Sarah Krishbaum. I don't see anything for sustainability on him yet. This will correct me now, which is nice. Betterment. Board member. Who is Betterment? Help you make the most of your money. What? Oh, this is the app. All right, so no sustainability. The two leaders, execs, don't make it, so they're off the list. Pure and simple. Doesn't make the rules, don't make justifications. So it's out. Hey there, Walk Among Us. Welcome, welcome. So glad to see you. Internet decided to take a crap today. Yeah. Glad to have you, though. Happy to have you. Porto, good to see you again. Says, did I talk about my when I exit a SPAC investment? You might have just missed it when you were on a call. So a little bit, but not entirely. The main strategy here regarding SPACs and this exercise is we want to get in pre the investment agreements. Once an agreement is met, or if before the agreement's ever met, it increases to a point where we can take risk off the table and start playing with house money. We'll do it, which is targeting 100% return, meaning it doubled in value, and then we'll take off half the position and carry forward the other half. So that's the exit strategy for this right now. Don't think all of them will get there, but I thought of it as a possibility here. Trader X 3000 says, is Apple breaking wedge to go up? What time frame are you talking about for Apple? Also, I should probably check and see if I'm still signed in, which I'm probably not. Logged out. All right. Not on screen, right? Right. All right, good. Here we go. The 15-minute and 1 hour. Sure, we'll check that out. Welcome, by the way. Thanks for the question. So, I haven't got to do this yet. If you don't have it, get two-factor authentication for your finance and or favorite games, guys. That's so weird. I'm like 99% sure somebody took somebody who passed away's account and is trying to contact me on Facebook for a scam. Anyways, so two-factor authentication. I worked in information security in finance for a little while, long enough to know that if you live in the United States, then 80% plus of you as of 2016 had your information sold online 3+ times over. Okay, so get two-factor authentication. Your financial institution probably offers it for free, and it's better than, you know, having somebody hack your account and drain it because you thought, oh, it would never happen to me. It happens to people every day. It does. And no, it's not sponsored. No, I don't get paid for that. That's just my public service announcement whenever I get logged off. All right. Porto, one of yours closed their deal today. IPOC. You think you'll sell now? Well, take... yeah, I mean, definitely. If you meet your trading objective, you should be closing a position, right? Otherwise, you're justifying and stuff. Thaddy, place to check if your info has been involved in a breach. You know what? Let's do this. Can I? Ah, shoot. No, I can't. I can't do it there. But I can do it over here. Community. Mm-hmm. Oh, 3Ds. All right. Yep, that's the one. Perfect. Boop. 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 All right, try it again, Daddy. You should be able to post the link now. All right, so as requested, we're going to go do a quick review on Apple. Oops. Not supposed to type with slashes on the site. Come on. And of course, because you mentioned it, They Walk Among Us, I'm now going to have website issues or connection issues. Come on. There we go. Okay, maybe it was just a caching problem. All right, real quick review. Current PE on Apple is 39.6. Forward PE is 29. So basically kind of at or just above fair value for the sector. Not hyper overpriced, but a little bit. Now, from a trading perspective, if we're looking at the 15-minute and 1 hour charts, no, I would not call that a wedge on the 15-minute. There's definitive consolidation and definitely a little bit of a bull run here. But resistance is at the 200 mark, SMA mark, which would be 132.28. And the volume conviction is only just now starting to tick up. So this is too early for me to call that this would be a breakout trader. Now, if we switch it over to 1 hour, 1 hour, 60 minutes. This one I would say is a wedge breakout on the 1 hour. But again, that's a much longer time frame when you're looking at trading data. The 15-minute still kind of quiet. 5-minute has some activity, but you can see here that the conviction is kind of split. All right, this red candle was definitive profit taking, so maybe it hit a level people expected, and then volume after the fact is offsetting it, but it's still very early in a move. So just from a technical standpoint, yes on the 1 hour, no on the 15-minute, and then short term is still kind of undecided. So that's an indication to me that the move is early. No, don't apologize at all, Thaddy. I have it specifically set so that moderators are the only ones who are allowed to place or enter links. Mainly because we get so many people jumping in bots with the spam and stuff. So I made that swap. Nice to be here. You're learning investing and pattern trading. Congrats, Trader X. Welcome to the group and the community. I focus on a more broad sense when it comes to finances. I do everything from the ultra basic, balancing your checkbook exercises to advanced due diligence, long-term investment, portfolio hedging, and management strategies, including day trading and active trading, but my primary focus is just investment discipline, which takes us more often than not into longer term conversations. Lortano says, looks like your Q1 Tesla high prediction is right on track. I'm telling you, it's got the momentum behind it. It does not surprise me at all. What do we got here? My target is 1,091. Where are they at today? 810. And this is a pretty comfortable position. Let's look on the daily real quick. VWAP is 798. So it might fall below VWAP still. If it closes below 800, not as strong a pop-up as we would hope for. So that could be a sign of weakness if it doesn't close above the VWAP. But that's why I do the exercises. That's fun. I like it. I'm glad you're liking it too. All right, and then Thaddy added a link to a site, haveibeenpwned.com. That's actually one I've used in the past, and it does a really good job at checking your data breaches. Also, if you use Google Chrome, they have built into their own systems, if you go into your password manager under settings, the ability to detect, and they will tell you whenever you go to a site that has been hacked. My guidance to you is change it immediately. Also, make sure that you're not doing all of the stupid stuff that people have done for years with their password of 123 or cool12 or password or house or your name or your date of birth. Don't do those. They're all bad. All right. Your MySpace has been hacked since 2008. I wonder if mine's still active. All right. Anyways, start the battle. Oh no, they changed it. It's not like the same as it was, so mine's deleted. All right, guys, we're gonna do the battle. It should be easy. What do we got? We got this yellow dude. Looks like a wizard of sorts, and he's not attacking any of us. Whoever this is, BMT 65, looting. He is a rogue, though. All by himself. The rogues are all just going for the chests. I like that. Wow. Oh, it's dead. All right. That guy put up a little more of a fight than I fully expected. We win. All right. BMT 65, because you snuck down and I guess placed a whole heck of a lot of rogues. Congrats. 11 kills. 4 assists for Meritori, and then 4 assists for Liquefied Cactus. Welcome to the rating, guys. All right. Rando winners. And you get 7 gold each this time, guys. Thaddy with 2, Liquefied Cactus, and Meritori. Congrats, everybody, on the loot. This is the point when I ask if y'all want another one. I'm leaning towards yes, but it's y'all's call at this point. Do we do another raid today, or do we save it for tomorrow? Cue Jeopardy music. Thaddy, there are a great deal free and paid secure password manager options out there. Listen to this, vouchers for KeyPass, as well as Thaddy. Hey, it's really awesome that you guys are also promoting stuff along data security. Good job. Thank you, guys. So KeyPass is cross-platform and open source, so if you don't have a way to protect yourself, highly recommend it. 1 vote for tomorrow, but 3 votes for today. 4 votes for today. All right, so the ayes have it. We're going to the next raid. Boop, boop. This is one of those, we're going to reveal enemies over time. The last couple of times there was a building on each corner, so I would assume it would do the same again. I'm going to go with my healer because it's my strongest character. And by strongest, I mean it just keeps people alive. Oh, look, something showed up. All right, that's the first place to show up. We'll go for the bottom this time. All right, if you want to stay alive, come join me, guys. All right. Uno mas. 5 have it. Wow, the most votes. Put up a 1-minute poll. I do polls on occasion, but not for this. This is just yay or nay, kind of thumbs up, thumbs down. All right. Back to our due diligence, I'm pretty sure. I don't think we've got anything else in our way. So on our SPAC tracker, we've deleted 1 so far. Well, actually, I deleted well over 200, but we're going to dig into this a little bit more. Can you even read that? I can't read that on the stream. Just +1 more. That wasn't much help. All right, so next is Peridot Acquisition. This is Alan Lavad. Covey Park Energy, so it is in energy. Environmental sustainability, greenhouse gas reduction. That immediately tells me that at least the first guy here, Alan, has some experience. We also have Jonathan Silver, director in Plug Power. Nice. They're pretty popular right now. National Grid, as well as a former director of Logan programs. Don't know what that is, but he's got it. And that was under the Obama administration. So we'll go ahead and say that one counts. I also am comfortable with Alt Energy and Epic Bios Inc. I guess that was good enough. It's not a bad bio. Or are you talking like, is that a site I can check these names against? Because if that was the case, I mean, it's better than LinkedIn, I would hope. Because LinkedIn was kind of a letdown. And look at that. There's hardly any info here. Check, check, check. It's a resume. Oh, gotcha. Epic boys. Oh, you're right. I appreciate that, Miratori. Thank you for the epics. 1, 2, 3, 4. So Miratori further, Carrying Horn, and listen to this. Yeah. This raid stands no chance against us. All right. Anyways, back to the tracker. This one gets a go. Let me make sure that I covered all the rules here. That was done up front. This is done already. That is done. Manager check and focus. Nope, that's me, myself. All right. So just so that I don't, like, as I sort the list, have to worry about it, we're going to go ahead and go with a really light yellow just so that it shows up that I've reviewed and they have passed all of the initial thresholds for an investment. Let's check price since I'm already there. I just want to do the first one. 1050? Yeah, that's well within parameters. Okay, here we go. We're happy with that. Okay. Next one, we've got Falcon Capital. This is Alan Munchin on the board of directors. Target Hospitality. Jeff, Eagle Equity Partners. And they're looking at media and digital. Shrink this so that that shows up a little better. Oh, that's why it got all small, because I shrank it. All right. Sorry. I know it's going to be hard to read, but I need more details or data here. Thank y'all. All right. Consumer tech, interactive entertainment. Well, first off, your background in hospitality does not give me confidence that you know what you're doing in technology. And then Jeff Sagansky here. So we're going to look at this. Falcon Capital. And we care about Alan first. Alan, whatever your last name is, should come up. Did it come up? No. It's Lemonade. Like lemonade, Alan. Lemonade. There's no W. Was that not right? Oh, where am I getting Alan Lemonade from? That was the last company. Got it. All right. It's actually Alan Munchin. All right. Or Mnuchin. All right. Wharton. Running asset management. Not super impressed so far, my buddy. What do they got here? Nation. Nope. Blank check. Don't care. Investment strategy. All right, so he himself is an equity player, not a talent. So we're going to go on to Jeff is next. Another private equity. Works with Target Hospitality. More private finance. Here we go. Paxson Communications. 5 years up to 03. PAX TV program. Why do I remember PAX? Who the heck's PAX? Oh, Ion Television. Okay. Alright, so he worked in TV in the past. So I will say that is close enough. We're not being highly scrutinizing. Gamma Satch, you got it. Let's go to the filter. Display capture. Oh, I'm in the wrong column. There we go. Filter, gamma. Doop. Nope. Doop. Es más bueno. Thumbs up, thumbs down. They walk among us. Thank you for the, by the way, for bringing it up. Better, yes. Okay. You know, it comes out like, or up on stream on occasion, and the only thing I can guess is that maybe the connection to Twitch is, I don't know, somehow applying its own filter on occasion. Because sometimes, particularly when I switch between dark and light pages on a regular basis, I notice that I'll get gamma complaints, even though I have my own filter overlaid. Could also just be the function of Streamlabs, like deciding my filter is altered, but I don't think that's the case. Regardless, though, I just adjust the display filter and it's fixed. But somebody has to tell me, because sometimes, for most of the time, I get it to this point and it's perfect for like months until somebody else says it's a problem. It's like you're on a ramp, the winter or wider web page, more. Oh, yeah. It scales depending on. I think the only time I will get gamma problems to come up is when I switch to using spreadsheet more frequently on the stream, because most of my stream is focused here. Pretty easy on the eyes. But whenever I switch over here, after a couple of months, somebody will say, "Oh, your gamma sucks." So I just adjust it. All right, Gore's Holdings is next. Why don't I have a target focus? Well, you're off the list. Not looking for extra work. So you're gone. All right. Next is recharge acquisition. Also no focus. Oops. Z. I'm kind of interested in that though, because this tells me by the name maybe they're targeting and their team some sort of alt energy vehicle, and I just feel like that's gonna be a play there. So just because my spider senses are tingling, I'm gonna go ahead and let myself do the extra work here and go figure out what the heck their target is. Go back. Objective B. C-store industry. What is C-store? Just commercial stores, it looks like. Okay. Yeah, no, not interested in playing that game with you guys. So you're out. You're out. Goodbye. All right. There we go. Bullhorn Holdings. Former NBA player. Sports franchises, tech, entertainment, and brands. Well, that qualifies. I mean, he's going to have at least connections to people who ran the business. Barry Eagle, and this is for Quell. Or Kel. There's no U there, so Kel is what I'm going to call it. Let's see. GM, General Motors, Agility Fuel Systems in Canada, or Ford, Canada, as well. Agility Fuel. Don't know who Proterra is. Next Gen Mobility Transportation. Yep, you guys qualify. Good. Former NBA player seems like an expert. They surprise you sometimes. Like, sometimes the players really do dig into the business side of the game. Not often. But then they also bring with them some brand notoriety, as well as, hopefully, actual contacts. The fact that he's focused on sports franchises and technology means that I'm okay with it. Like, if it was a NBA player who wanted to open a bakery, have a good life, bro. Not interested. They have time and the money. Well, not necessarily. They've got the money, usually, sometimes, if they managed it well enough. But the amount of time that goes into just the hustle and bustle of pro sports, if it's during the on season, they have pretty strict schedules. It's ridiculous. Yeah, they walk among us. This is a superficial, cursory overview. I agree with the additional DD. I am focused only, though, on targeting the rules right now. And the rule is written simply that the managers have experience in the sector they're targeting. So that leaves it kind of broad, and he qualifies just based on that alone. All right, so we've got next FTAC Olympus. Oops, what in the world? All right, there we go. Betsy Cohen from Bancorp, fintech. Not interested in financials right now, so y'all go away. You go. Hey, we made it to Pershing Square. Bill Ackman. Have no clue what Pershing Square is targeting. I've talked about him a lot. I should know at this point. PSTH. Target. Industry. Really? D. Offers hints. Alright, so he has not given clear guidance, and while I'm interested in his project, it does not meet our rules. So long. Fintech, financial services, you're both out. Not interested. Leisure, gaming, hospitality. Tusk Adventures, Ivory Gaming. Y'all sound like you're like African safari hunters, and not sure I like that. All right, IG Acquisition. Let's figure out what you're actually chasing here. Oh, Tusk is his name. Okay. I guess I'll let that one slide. Gaming. Kind of interested, it looks like, in Vegas is what they're targeting. So let's find out who Brad Tusk is. Guess he doesn't like bread. It's Bradley. Venture capitalist, philanthropist, writer, political strategist. None of these scream to me gaming. Campaign manager for Bloomberg. Still doesn't tell me. The Fixer, saving startups. Okay. So he's venture capital. He's not the real talent. And he is the only name listed. So long. Boop. Should have had somebody else on his team. All right. Next is Bluescape. We're dealing with C. John Wilder, CEO of Shell. TXU, don't know who that is, but we can find out if needed. Cushman and Wakefield. Okay. Energy Industrial. Shell. Energy. Nope, don't need to find out right now. You are passed. Not interested in healthcare. Delete. Not interested in fintech. Delete. Technology. Let's make sure I'm not ignoring you guys too much. Thaddy says, for you, DD can be a huge anamorphous thing, so it helps to bring it down to earth, and it makes it seem possible. Yeah, I mean, really, it's just... Once you have your objective, Thaddy, and then you want to put together some rules. Once you have your rules, it's literally just doing the scrub work that I'm doing right now. Tick, 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 tick. Going through, check mark, removing things off my list until the list becomes manageable. After I get through the next 70 because we've only got 7 done. The next 70 on the list, then it just becomes an action of making your investment decisions and or entering your orders if you need to go further. Like, if you're really interested and hyper interested in digging way down, you can, right? This superficial approach that I'm taking, I'm going to be honest, my intention is that when I get to the end of this list, anybody who's stayed or I've kept is getting an investment, right? Again, full disclaimer for anybody watching this on a VOD, this is a hypothetical scenario. I'm using a hypothetical portfolio, and I will be putting no real money towards these SPACs because I don't have any idea if my investment idea is going to work out or not. But all of that in mind, right? Even if I was doing this for a real portfolio, this is exactly how I would be going about it. I spent hours and hours, I can't tell you, doing it for other people. Now I do it for myself, and I put my real money at it, and you guys get to watch the journey. You appreciate learning about fundamentals as part of a linear and connected process because before this, your knowledge was a lot more theoretical and foundational. Well, I'm glad you're finding value. That's a big part of it. Like I've gotten so much interest from the community on SPACs. I was like, all right, let me become. I'm not going to call myself an expert, but I can use my backup industry knowledge to become a subject matter expert. At least I'm going to have way more details after this about who's in the SPAC space, how frequently and successful. I mean, it's not going to happen overnight. A couple of months down the road, I'm going to have a better feel for if this particular strategy towards SPACs works. I'm also going to uncover as I go pitfalls to look out for and things to be more afraid of, just the beyond the I wouldn't say afraid of, but more aware of than beyond just the foundational stuff that I keep providing the group, like understanding don't invest in a SPAC because it's popular if it's trading at 3x or 2x or 5x or 6x I've even seen this year what its initial offering price was, because it doesn't have that much money. That's not how SPACs work. That's not how investments work. Just because you've picked an endeavor doesn't mean it's going to be successful. That is the beginning of the work, not an indication of success. Perfect. All right. So artist acquisition, Charles Drucker. He used to be in WorldPay. He's calling this tech, but oops, stop that. Is he investing in finance? Because WorldPay tells me finance. So copy this. Artists. I guess I should put the guy's name too. Charles Ducker. What? Autofill, you're wrong. Ducker. It's not Charles Ticker. Oh, it's Drucker with an R. That's why. Drucker. This is his portfolio. In financial services industry. Fidelity, okay. Information. So he's got a tech background, which is good. Now, what is his target? Because if it's fintech, I don't want no part of it. All right. Software solutions for B2B and or fintech. Not really clear. And how far along is he? Nope, that was towards the beginning, I guess. IPO'd in June of last year, and he gave himself 24, but he falls within our parameters for the expiration. He's too close to fintech. I'm going to say goodbye. I have a feeling he's the kind of guy who'd probably just move into fintech. Charles's face tells you he's no good. Sorry. All right, Charles is out. Ugly face, gone. Simple as that. But not Charles Ergen, because we haven't seen him yet. Mr. Drucker's out. All right, Connex. Really? You're gonna make a company, special acquisition company. You're gonna call it Con something. Anyways, Connex or Conks, however you want to say it. Charles Ergen is CEO and executive of Dish Network, Tech Media, Telecom. Okay, we like that. Can't say as we liked Dish Network, but not a bad target here. He clearly has the experience. I'll go ahead and say that's a pass. Chinese, nope, no Chinese, guys. Sorry. Too much going on with tensions. No target focus. You're off the list. Dan Hunt, FC Dallas in energy. Well, as long as FC Dallas had something to do with energy. Hunt Sports. What is FC? I can't assume that just because he's from Dallas, he's got energy roots, but what is FC Dallas? Looks like a sports franchise. Oh, MLS Board of Governors. It's real estate. Still has nothing to do with whatever's going on here. Toyota Stadium, soccer. Yeah, no energy background. You're out. FC is football club. Yep. That's what it was. Football club. Thank you, by the way. Soccer. You guys caught that super quick. I need to pay more attention to the chat then. Says definitely going to do some more DD on Baron Davis, former NBA player. He's an entrepreneur after his NBA career, but not exactly a successful one. You know what, though? You got to take some knocks. You do. I don't trust anybody who claims they've had 100% success in their life. But that doesn't mean that just because you keep failing, you're going to be good either. Super late, but I'm just now noticing. Life is great. Thanks for the follow if you're still hanging out. Appreciate it. Also, non-destructive war. I like the name. Welcome. Interesting concept. All right, raid is ready. This is our last raid, so let's get this knocked out. And then I'll switch over to this. And then we're going to open it up to general Q&A.